What's up, guys? Welcome to Joy of the Trade. This is my Friday weekly wrap up. And every Monday, I give you guys a roadmap as to what I'm looking at to start the week, what I think is going to play out, how it plays out. And then on Friday, I like to review what I got right, what I got wrong, why I got it wrong, what went right, what the market's thinking, and what we learned this week, broadly speaking. So on Monday, I discussed the earnings that I was interested in seeing how they would move the markets around. And earnings were kind of a little bit, again, fragmented. We had some big winners, we had some big losers. We had Etsy come out, big online shopping, just like Amazon. They saw their revenues, they guided lower. They were iffy about the future. Could be a lot of the bump that those online shopping companies got were based almost strictly on COVID, but Delta variants here too. So you got to think that they're going to still make money. So that was one thing. Another thing was Baba had earnings. Market was muted. This China thing, and I've been harping on this a lot. This China thing is in the first or second inning. Those of you that see these stocks are 30% down and are saying, wow, this might be an opportunity. This is just getting started. This is just getting started. Just last night, Evergrande, which is a huge real estate company in China that also owns a lot of stuff in Hong Kong, commercial real estate, huge, beautiful residential condo buildings as well. These guys are a debt bomb, and they were shopping around bonds last night during Asian trading hours. A buddy of mine sent me a text this morning, 30 cents on the dollar, which is like these guys are going, you know what? Nose up. I'll say nose up. There's another word, but very scary, and it's an omen for the rest of the market. But I also gave you another trade, and I want to show you that, and then we'll go over the jobs number that just came out this morning and what that means. So I give trades every week for free, guys. To you guys, subscribe to Joy of the Trade, and you'll get these trades. On Tuesday, I said short Nucor. Stock was around 106. Closed yesterday around 101 and a half. Not bad, not bad. I think I expect it to go a lot lower. My big thesis was, and still is, there's big deals coming out, infrastructure deals, steel's needed, Nucor is right in the center of it, and it got like a very wimpy pop. And now you're having inflation pressures starting to look like yields might rise. So there might be a damper on the reflation trade. So why is there going to be a damper on the reflation trade? Let me show you here. You're all going to love this one. So just this morning, it came out, this non-farm payrolls number, right? So we were expecting 870,000 jobs. We got 940. Last month, they were expecting 1 million. They got 850. Market liked that, actually, because it said that the Fed is using the jobs as an excuse to keep buying bonds, flooding the market with cash, and printing money, for lack of a better term. They revised upwards the prior month to 938. But check this out. This was a big surprise. There's a couple of big numbers here. Unemployment rate's down to 5.4%. Under 5% would be considered full employment. So you can't use the employment excuse to keep rates at zero and to keep buying bonds. And average hourly earnings are white hot, 4%. That's huge. That's inflationary. So what happened on that is really interesting, and it affects everything, because I know you guys have been listening to me talk about this 10-year. Look at this bond. So 10-year yields, boom. Now they break back above here, above 200-day moving average. I think we're going to be testing back around the 150 level, right back around the 100-day moving average here soon. I think that's the new move. I think we put this bottom in and we're going higher. What does that mean? It means banks will be good, finance will be good, XLF will be good, and this bond TLT is I have this money link on right now, the TLT, which is getting smoked this morning. And so be long banks, be short bonds. Tech might be a little weaker, and it'll be interesting. We've been seeing in the past 6 months, we've been seeing a rotation. Every time tech sells off, we get the reopen pop. But now we have this Delta variant. We have people spooked all over the country. We have measures going out everywhere. Last summer, it started in the south and it went to the north as the fall and the weather got colder and people were forced inside. It's seasonal. And it's going to be interesting to see if rates go higher. Will the money that flows out of tech flow into reopen stocks again? I think it's going to be a little bit tougher this time because of the Delta variant and because a lot of the commodity prices have reached kind of like a plateau. So LFG, guys, Have a great weekend. If you want a free trade every week, sign up for Joy of the Trade. If you want to learn how to go long and short and take advantage of these macro relationships, check out moneylinks.com. It's on the Wealth Press site. LFG guys, have a great weekend. I'll be back next week.